Gentlemen and ladies, how are you? Quick take on the markets. We had non-farm payroll just the other day, and I wanted to give everyone a wee flyby. This is your free view. So dollar index is looking a bit soft on the overall index in terms of the daily chart, but I just want to point out a few things on the bigger time frame. These were the ultimate lows of the dollar index, very soft dollar policy. Then we had the 2008 crash, spikety spike, boom, boom, bash. And we had the euro crisis, big element of the euro and the Swiss franc, and also the other European nations, including the pound in the index. So those euro crises were quite a difficult old time, and then they kept trying to put the genie back in and getting a little bit of weakness come back in the dollar. But then we had some proper dollar strength from this period on, after squeezing very, very tight. Up she goes, up she goes. And then we've kind of softened a bit, and we've sat at a ledge level here that is now roundabout in the mid zone of the dollar index. So I'm going to pull through some real old history for you, and you can see that the dollar index, the dollar's actually lost an immense amount of value against a lot of currencies from the early days, pre-80s. You may remember they went for a proper strong interest rate policy with the last credible Fed at Faulkner, and he broke the back of inflation. Anyway, rounded bottom there, rally, dip, kind of rounded bottom with a number of spiky complexities, and then a squeeze, and then an upsurge. And then we're roughly in this range here where we sort of pull back, and it's a difficult area to trade because it's in the mid zone. You're not an extreme value end or an overprice point. But we have, and we can see that we've sold off, we've broken that ledge, and there has been a bit of a bleed out, and there's some element of what I'd call broadening. That's that across the top, which is the opposite of a squeeze. Generally, if you wanted upsize, you would want to see a squeeze continuation, much like you got there. So up move, squeeze, and up move. What you get is broadening. You're going to get softer, so you get a weak rally, and then you have softened, and you've fallen out the bottom there. This said, this has been quite a long period of softening for the dollar. There's a bit of, people like to tie it into narrative and fundamentals, the America first thing, and Trump refusing to shake Merkel's hand was all about, we don't want you to get all the currency benefit and selling all your Mercedes-Benz and BMWs to the world at our cost, etc. And China's a currency manipulator and all of this story. So since the Trump era, he has softened the dollar a little bit, and many might argue that would continue. But I also reach a point where the euro can't carry too much strength for too long either. So we've had a long period of sell-off. We had a little bounce on that broadening, and we've dipped below. You can get that return move as we're getting. We could dip a little bit more, but when you drop to the lower time frames, I'm inclined to think that apart from this non-farm for now being a bit weak, we could dip a little bit lower. We could dip a little bit lower. This could be a small amount of continuation and return move. But in the longer run, how much more can they take back of the euro's strength, the dollar, or how far weak can the dollar go before it becomes a real issue for the eurozone again? Remember, those banking issues never went away. Let's look more specifically at the euro USD, because that's a bit of a mixed bag, that dollar index chart. It does look like the dollar still could go a little bit lower for a while. And I would say on this chart, you get a much better feel for this. This was a key level, 125s. It's been a key level. It's kind of like the head and shoulder neckline there to a degree-ish. I would draw a grind line there. Many would call that the neckline of the head and shoulders. I wouldn't agree. I'd choose something that went through both. But then you go through, you had a bit of just run, dip below, smashed, dip below, run, pull back onto. You can see it. There's the support, just run, bounce, just run, bounce, just run, bounce, but not so strong a bounce. Capitulate on the shorter times. You can see there actually was rallies, indecision, and then spill. We've now got to those points, and you're getting the selling wick, selling wick, selling wick. So, I mean, if that heads down, remember that is euro to dollar. It implies that there's probably euro weakness relative to the dollar, aka dollar strength. That's on your monthly. So we're looking at the big time frames here. That doesn't mean, tomorrow expect the dollar to be ramping. But the reaction to a very bad non-farm number is actually quite muted. And that's also a warning of relative strength. So there was upside continuation. That was the euro dominating. and leaving some funnel levels for us on the way to meet on the way down. This does not look like continuation. You can see serious selling there, shooting star selling again, not making it as high, selling, not making it a high, selling. So euro is not a boss about to be for me at these levels. And you know, it's quite a binary relationship in the big currencies. That's not to say there aren't big currencies out there like the yen and the yuan wanting to be, but in the great trade game, these are not as significant as the dollar, euro, USD. So weakness for euro will probably mean more money parked up in dollar. Despite this trade war and all of this, remember what I showed you on 2008. In times of fear, people run to dollar. That's the Pavlovian response for now. There will be a point where I feel that Pavlovian response, apart from not holding anymore, will no longer work. And may not be far away, but if we just look at that, you know, there was an attempt at a bull flag continuation to get you back above the line, and it just didn't continue. There's your line, there's your stuff, and you didn't even get there, and you spilled and you've broken that point for the dollar. So while the euro getting a small amount of a bid on that weak non-farm now, for the daily chart, I think that can give back, and this has turned into something a bit ugly that could fall and ease off here. So that means dollar strength against the euro. On the bigger time frames, so we're talking dollar daily, weekly. Remember, those of you on cryptos, dailies is a massive chart. So what does that mean for the anti-dollar, aka precious metals? This is a key part. I'm going to talk to you about precious metals. I'm bearish, precious. Let's try that one again, precious metals. So what have we got? That was a key level on precious metals. This is your monthly chart. I'm going to drill you back in here, but you can see it best on the monthly. We call that a grind line. By the way, you'll learn all about that and far much more in detail on our trading metamorphosis program. So come and do the free webinar only if you're serious and the method makes sense in terms of how we approach markets, and you recognize that it's an on-balance probability methodology. That's April the 12th. That's this Thursday. Sometimes I keep saying Friday. Thursday at GMT 19:30. That's 7:30 GMT. You can find out more, and you'll find out about the 7 gifts. It's the last time I'm doing this webinar live, by the way, so you might enjoy it. The 7 mistakes traders make, and the 3 great gifts they forget to use. So we had a fair amount of structure here, and some could argue you're going to get a left shoulder head, but this is too deep for a right shoulder, given that left shoulder, and this is a steep grind line. It could still work, but not without, in my on balance of probability suspicion, we're first getting a dip through that grind line. You see these candles, these are very bullish candles, bought from below and rejecting the sell-off, coming back up, bought from below and rejecting back up. You can see them on the monthly time frames there and there, but these are not bullish. These levels here, once we spilled the 1350 level, we couldn't hold it for any significant period. Shooting star selling, selling tall wick, selling tall wicks here, shooting star spill. See that rejection there, and there again, rejection, 1350 stroke to the 3075 level just keeps kicking gold back down, and you've got this nasty drift up line, so there's lots of people accumulating, which this thing will go, that is exasperated, and you won't give up the ghost. So for me, there's a sell to come on gold to dip back. So you've got potentially the euro to dip against the dollar. Once again, it's not a guarantee. That's my assessment. On a medium time frame, it doesn't have to happen tomorrow. So I'll show you tomorrow. Don't save your breath. This is a medium time frame assessment. This is a monthly chart. It's not markets. So in the same way, we can see this doesn't look like a continuation. This doesn't have a good structure for continuation. You can drop it right down into the daily there. And it's choppy and volatile. Look at that. Bad non-farm number. And that's it. That's it. Down, up, down, up, down, up, down. And here's your up candle for the day. It's not strong. And our little sister, oh my goodness, she's just sick as a canary. The precious metals market doesn't move if you don't get some life out of silver. The strength of precious metals wants silver as the higher beta precious metal to be climbing higher and faster than gold, aka your XAG XAU ratio, and this has largely been trending up. That's your trending up on it. It has got a bit choppy, but largely this is trending up. You see it on the same time frame, you can see it's trending up, trending up, trending up. So XAG, if we look at this and the squeeze, there's something going to be a big move coming here on silver, and it doesn't seem bullish. It tries to go up, sold back down. This is very low volatility. Very low volatility begets a move. Some might say, well, it could be the beginning of a pump. They could be right because there was a move before, but this continuation pattern, which is so long, this move is almost insignificant relative to it. This is near a bottom. This could be continuation to the downside. As you got squeezed deeply across the tops here, what happened? You spilled to the downside. You're getting mostly squeezed across the tops here with a flat bottom. Again, what has happened? This was the last base where you had mostly squeezed across the top. Everyone was screaming bull, all the precious metals. I said, no, it's not bullish. No, it's not bullish. I'm sorry. I'm a precious metals guy, but the chart tells me the direction. It isn't bullish. We had overperformance of huge scale on this structure setup that had an ascending setup of some time frame, which saw us call for $31, saw a massive overperformance run to $49. That left us thinking, damn, we're off the chart here. We sold too early. Overperformance begets future underperformance. Ask the guys in Bitcoin 6,000. This is mega rent. They've been calling bulls all the way up and trying to buy the various continuations. It ain't over. Bears die slowly. They're big beasts. So you've got this. This is not good. This is descending line. Don't expect Mike Maloney, Peter Schiff to be saying this to you because they've got precious metals to sell. They're good guys. They're on the right side on many things about the economy. It's not a diss, but I'm not trying to sell you precious metals. It's not my game. My game is helping develop people's to have a methodology so that they can manage their own wealth and not marrying an asset class. There is a season and there is a time for all things. Ice cream is summer, and winter it's glühwein and miso soup, or whatever your analogy is. Anyway, I digress. Squeeze, 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 descending triangle, descending triangle, descending triangle. You've got two descending triangles, and they broke up. You had a steeply ascending one that melted up. It's not difficult, really, if you can keep pragmatic. This has a strong possibility, or probability even, that there could be a dip again over here. It was rejected very strongly there in that hammer, it has to be said. And fundamentally everyone says, oh, the supply, the narrative, I could never short silver. I'm not telling you to short silver. I'm just saying, whatever the news says, the manipulation should have ended years ago. I got told that there was 9 billion and we were sub 1 billion tons of silver above ground, and that fact's been out there for decades. I don't know where they're getting all the silver from for our devices. I can't add it up. What I can see is which is following the money, and it's in the charts. So you can't always get the narrative straight. You get the answer come later. This is not particularly positive. But if whatever it does, it's going to be fairly impulsive. It could pump and then come back down. It could. So, we could be inaccurate, but the bias view is probably down. That was quite a nice little run-up, though. It was quite a nice little run-up. But, it spilled there and revisited. You could get a hammer like that again. You could go back down, and then it could come back up quite strongly. Because there is an element that eventually it's basing. But we're getting the same. It's amazing how all the anti-dollar charts look something like this. This could be the Bitcoin chart, but instead of monthly, it could be it on a weekly time frame. This could be this is the gold chart, but just slightly less excessive because it's a lower beta on the monthly side. There it is. It held on to a lot more. It's easier to hold. So that was the same ascending triangle. It's still a little higher, but it can dip and it can go lower. So in this fiat propagated world, we should be flying, but supposedly the interest rates are going up, and that's bad for gold. I don't think they can go up too far, but you have a trade war, you create a fear situation, which has me thinking, in the case of fear, a lot of people run to cash and dollar cash. So you get bank balances and cash, which is great for banks, especially if they're going to have a smackdown and they want to do bail-in. So be careful. But that's the defense. So dollar looking like it could be medium long term getting some strength despite a terrible non-farm. And as I pointed out, the Canadian had great data, the loonie, and in actual fact the dollar's largely shrugged off its sell-off on the USD CAD. I think that was it. No, yes it is. So it looks like it could have a longer leg, but this is a double. This is a W bottom. This is key level of significance here at 127.5 for some time frame. This is monthly. Note the bounce, the rally, the smash down, the return move. That level, lots of selling there. Then we got above it. And now we've got a falling wedge structure where we might have a down leg, but the overall structure here is going to point to a pump to the upside at some point. That's not tomorrow, guys. That's not tomorrow. Remember, this is a monthly chart. You could have 3 or 4 candles down. You can have 2 or 3 up, and then another one down before you have a pump. But this is a key level of significance, and the overall pattern structure, whilst at the top end and can revisit, although it could just dip part of the way down and break. If it revisited all the way down, but the longer run would probably imply a move higher, although the timing wouldn't be right now. You could get in much lower. But let's drop it down to the weekly. Note it is a higher high. That was a short-term relative resistance point that's now been run, that little ledge. I'll show you that. By the way, that was the run-up. Complete blow off there, so it needed to shake its head and get to, that's what I call a bit of a slap in the face sell, and that's weak grinding late bulls that deserves the second move down. But that actually, as a low, didn't go much lower than that low, and then was supported back in, and you've come back. That was your sell short level, and you've almost returned entirely to that, and that was more impulsive there. So that's why I call this a falling wedge, which is a longer run, a bullish setup, because there wasn't further continuation with any great zeal to happen here. So there we go. So those were your tops, and those are kind of your bottoms for that little ledge there. Then you sold off again, and you're back above the ledge. You could argue that that is a neckline now for a left shoulder, head, right shoulder, and that you've broken. There could be further continuation, which is why I say you could dip a little lower. But after very positive Canadian based data and bearish US data, you've largely shaken it off in this candle. Maybe there will be a knock-on effect a little later for a little longer. But if that head and shoulders, remember, just because you get a head and shoulders and you generate a target doesn't mean it has to be made. Everything is on balance of probabilities, and reversals are less likely probabilities than continuation. But you could shake this off. You could come down, dip here, and then not run all the way to the low and then be back breaking. So then you would have a higher high, you would have a higher low, and you'd then be ready to break your wedge. So that's still some way off if it were to happen. It's a scenario. It's not a promise. It's not a guarantee. It's not even a trade call. But that's your analysis for my hypothesis that on medium long term, whatever's going on in these trade battles, dollar to be strong, precious metals to be weak. Yes, they're not going to want to like you hear that. But I can see on balance of probabilities, I would suspect that could be the case. So that's your update from the Market Sniper. Watch the crypto channel for my takes on the cryptos. That is at the Crypto Sniper. And for the more edgy and speculative notion about the control structures and all the games that they play and what next and futurism, don't go there if it's not for your cup of tea. We just want folks that are asking questions about it. You can go to that Reset Sniper, subscribe there. And once again, this Friday coming, it's Sunday today, this Friday coming, last time ever on the 7 live, that is, on the 7 mistakes that traders make and the 3 great gifts they leave behind. Final offer for our trading metamorphosis program before our new platforms will be in place. Come and get those three gifts that you aren't using, that you should have, and that are massive for you as a retail trader, and those 7 key points where you keep standing on landmines that blow a leg off. Let's learn to minimize. Trading, to win in trading, is not just how you win on the winning days. It's how you preserve capital on the losing days. And I would say the latter is the bigger, because when you go bad, often people just let it all fall apart and let it go real bad. The amount of people I spoke to that stopped trading and stopped being active on their crypto when it started going down, and then watched 70% of their accounts be gutted and say, I don't even open my platforms anymore, I just left it. It's how you show up on the tough days that saves your capital. So you take a 15 or a 20% bath. Don't just switch off your computer and never look again because you don't like the news, and take a 75% bath because you're sitting in alts that are losing 85%, and you didn't even switch to Bitcoin, never mind taking an opportunity to get into fiat. Everything has a cycle. Even the strongest, most expansive markets will have periods of contraction, especially if they melt up from starting the year at a $700, $1,000 to $20,000. You can't carry on like that. That's high volatility, and you will have bloodbaths. It doesn't mean crypto's over. Okay, that's a little bit of I suppose, a rant. You need methodology, guys. It's the only thing. Otherwise, the emotions take over. Emotions are the lowest common denominator. Come and find out more. Only if you're serious. It is not for everybody. On Friday. I keep saying Friday. Sorry. Thursday, the 12th. The 12th, Thursday, 1930. Can't fix that. Must fix this brain of mine. Okay, speak to you all soon. Enjoy the weekends.